A quick, little bit more in-depth peek at what's happening with the market. Special Friday update. So currently we're looking at the GNMA 4% coupon, which is used for FHA and VA loans. And here is trading today. We opened at 107.81. We're down to 107.66 at this point. Looking at how last week actually played out. Yesterday, big warning sign, basically not a pretty picture because we ran up above 108 and then came back down fairly close to where we actually opened. And then what we really need to do here is hold it about 107.60 at this point in time. We're going to go back to the conventional market, which is Fannie Mae. We were looking at Ginnie Mae. We're going to go to the 3.5% coupon, as this is typically what I'm pushing out in the morning in terms of updates. As you notice, somewhat of the same pattern with trading today, somewhat of the same signaling a trend reversal yesterday. So do be cautious, because the higher the bond market is, remember, the lower that interest rates actually are. We have breached 103.60. We really need to try to hold this point right now, otherwise we're diving back down to an unknown point, and it could be at 103.40, and it could mean dropping down to 103. What does go up does tend to come back down. So if we back up and look at a quick 3-month view, long term, how the market has actually acted, you can see the steady upward climb with a little bit of ups and downs, and then trading is, depending on where we're at, can be between here and then at the upside where we're seeing resistance. And right now we need to kind of stay between 103.60 and then about 103.80. Otherwise we're looking for a new home at this point in time. Backing up to a max view, we're back to the heights that we saw back last year in September. And yes, as you go back all the way to 2010, this is the highest the bond market has actually been in the period since 2010. So we're looking at some very low rates, around 4 for FHA, 4.1 for conventional. So definitely keep that in mind. It is a great time to purchase. In terms of trading, how it's looking this morning, a very ugly picture actually. Our opening at 103.84 with the Fannie Mae 3.5% coupon, repriced for the worst at 6.30. And now we're starting to scoot sideways a little bit underneath 103.60. Again, I'd like to see us come up and close above 103.60 as the week, or as today's trading closes. Do be cautious, because we had a lot of positive economic news today. Some of it skewed in terms of, especially like the unemployment numbers. But adding more jobs definitely is what's hurting the market, because what you're seeing is either money flowing into the safety of bonds or going back to the equities markets to make money. On that note, have a fabulous weekend, and I will be back to you on Monday morning. Do be cautious, and we'll see how this actually turns out today.